SBF goes to jail. SBF is found to be guilty and is sentenced to 110 years in prison. The judge basically played the Monopoly go directly to jail card. Do not pass go. Do not collect 200. Ha ha ha. Sam Bankman-Fried, simply called SBF, has been found guilty of fraud of misappropriating billions of dollars of customers' money. In this video, we check out what happened and what can we learn from it. Hello, my dear YouTube investing friends. It is me, Ali, your friendly neighborhood value investor. In this video, I do a quick recap of the FTX saga. I talk about the trials and tribulations that SBF has gone through, and most importantly, talk about the implications of retail investors about SBF being found guilty. Once upon a time, like 3 years ago, there existed a darling wonder boy of the crypto world. This digital coin messiah was Sam Bankman-Fried, and he promised a wonderland for all crypto investors. In his divine glory, SBF created FTX, a crypto trading company. Loads of investors, from banks to startup investors, and even our darling Temasek Holdings had dropped millions in investment into this company. But also did your regular layman, thinking that their crypto coins were safe with FTX. From nothing, this man conjured up billions of dollars. Magazine upon magazines hailed his genius. The COVID-19 period in 2020 also saw a huge uptick in crypto believers, and these believers ran to SBF to park their coins with him. Alas, this miracle was not to last. You see, in 2022, rumors about a love affair between Alameda Research and FTX started floating around. A love affair of roughly $65 billion. Alameda Research was apparently a trading or investing firm where SBF was secretly parking his FTX money. And Alameda Research was losing all that money in bad loans to bad investments. Caroline Ellison was SBF's ex-girlfriend and was also running Alameda Research. Early 2022, when the crypto market started cooling, many investors started running back to FTX to try and withdraw their funds and sell off their coins. But little did they know that FTX was already drained of billions and that it had siphoned off their money. Eventually, on the 11th of November 2022, FTX declared bankruptcy, thus sealing all prospects of investors ever being able to get their money back from FTX. Of course, the market and the world went berserk with the news that FTX had collapsed. Angry customers and investors wanted to hack up SBF for all his worth so that they could maybe, just maybe, get some back of the money that they had parked with FTX. The matter, of course, reached the courts. SBF was put on trial to determine if he indeed was a mastermind behind the shuffling of billions of dollars, or was he just crazily unaware of what was going on in FTX. By the way, he was also arrested and he spent some time under police supervision too. So when a company goes bankrupt, it is not like the company just disappears from earth. Legally speaking, the company is still an entity that exists, and the company must try to clean itself up as much as it can and liquidate itself to try and pay off creditors, investors, and customers. So a sort of interim CEO is put in place. In the FTX's case, the courts put into place John Ray to clean up the company. John Ray is also famously known as the man put in place after Enron, another US company, declared bankruptcy. In FTX's case, John Ray mentioned that he was so surprised to see so little documentation in the company. He also was shocked to see that many important business decisions were done by SBF over chat with emojis. A truly millennial CEO. His initial findings pointed to SBF's lack of documentation and his nonchalance style of running the company. Let's come to the trials. The real court drama began 5 weeks ago. Prosecutors took some time to create a case of fraud against SBF, and a judge called for trials. Throughout the proceeding, SBF maintained that he was not guilty. His lawyer, of course, tried to prove that he was not guilty. His defense was that so much was happening in FTX that he couldn't keep track of everything. I like how Axios sums it up. The prosecution, SBF's attorney Mark Cohen said, was setting up their client to be something like a villain in a Hollywood movie. rather than what he was, a bright startup founder whose cryptocurrency business spun out of control. Unfortunately for SBF, the prosecution had a good case against him. They showed documents, or the lack thereof, that SBF was incompetent in managing the monies and also spent lavishly on certain things using company money. Example given was real estate he bought for himself and his parents, which accounted in the millions. But I think the final nail in the coffin was when the prosecution brought out Caroline Ellison, CEO of Alameda Research, and she testified that SBF, her former boyfriend and boss, was the one who was pushing her to make these under-the-table deals, and that she was asked to misappropriate billions of dollars. Walao eh, she just threw him under the bus, yeah? Maybe there is truth to what she's saying, we don't really know, but her words definitely has some weight. And maybe that's why the jury finally came to the conclusion that indeed SBF is found guilty of fraud. The judge then sentenced SBF to 110 years of jail. Now we ask, what are the learning lessons here? Who should you entrust with your money? What investments should you make? No matter what it is, the management of the company can make or break the company. When the firms are younger, there is more risk. That is why Warren Buffett stays away from IPOs. If there isn't 10 years of successive growth, don't even consider it. Venture capitalists, hedge funds, sovereign funds, Temasek Holdings, they play another game. For Temasek, the investment of FTX was only 0.1% of its portfolio. So losing all those millions still mean nothing much to Temasek. For us, however, it could have been 10%, 20%, or worse, 100% of our investments. Talking about the age of companies, while larger and established companies generally have SOPs in place and business runs as normal, it can still take a CEO with a lack of integrity or a CEO with a lack of vision to bring down the company. For example, Boeing, Nissan Renault, or even Nokia. So study the management of the company. Don't be lazy. Don't be too entrusting. What investments should you make? Firstly, people who bought crypto coins puzzle me like crazy. What is the inherent value of a digital coin compared to the US dollar? So buying coins is already akin to gambling. Secondly, you decided to show hands, go into all various types of cryptos. In the COVID-19 period, people were buying Doge coins, Bitcoins, FTT coins, and all other form of coins. Like, why? What I can speculate is that people get FOMO. They see these coins gaining popularity and just have to try and join the wave. Also, human psychology will trick you into thinking about gains, and you start calculating how much money you can make in the world of investments. Understanding the dynamics of risk and reward is key. So, the important thing to actually ask yourself is, how much money can I lose? Jumping back to the first question, who should you entrust your money with? Now, I would also question, why would you entrust your money with a company like FTX? What security does FTX provide to say that we won't close shop or that your money is insured? It turns out that FTX was not a registered broker. Cryptos have not yet been thoroughly understood, let alone registered as trading vehicles. So it turns out that FTX was never a registered broker. It was just a layman company. Why does it matter? Because most reputable registered brokers have insurance under SIPC, the Securities Investor Protection Corporation, or SIPC. If brokers fall under this scheme and they go bust, then you can get back up to $500,000 of your monies. In SIPC's own words, brokerage firm failures are rare. If it happens, SIPC protects the securities and the cash in your brokerage account up to $500,000. The $500,000 protection includes up to $250,000 protection for cash in your account to buy securities. So yeah, the FTX saga and people like SBF are a wake-up call. A man once worth billions only a few years ago is now declared a fraud and will be spending his time in prison. If you enjoyed this video, please hit the like button and subscribe to our channel. Also, please share this video with your friends and get their feedback on how this video is going. If you have comments about the whole SBF saga and the FTX saga, go ahead, write your comments at the bottom of this YouTube page. I'd love to hear what you have to say. See you in the next video.